We had a question about the changes for property investors and developers and second homeowners and when those come into effect. So there have been some changes to both. In fact, we can combine two questions here perhaps, because stamp duty land tax is one element, and then furnished holiday lets is another, which wasn't really addressed in this budget but is about to come into effect.
Yeah, that's right. So the big change, I guess, from a stamp duty land tax point of view is that the surcharge, for want of a better word, that's charged for people who own more than one residential property is going up from 3% to 5%. And that's on the full value of the property. So the way the system works is essentially if you own one property, you just pay at normal rates. If you buy a second property, then previously you had a stamp duty surcharge, you paid stamp duty of 3% in addition to the normal rate of stamp duty that you paid. That rate's now going up to 5%, which is, again, quite a significant increase, particularly on, and because it starts from the first pound of consideration, then that will impact everybody. Now, people who are selling their main residence, buying a new property, but they can't quite get the timing right, they would potentially, if they still own two properties, they'd have to pay the 5%, but then they can claim it back provided they sell their former residence within a 3-year period. But for people like property investors who are looking to build up portfolios, this 5% will apply to every additional purchase that they make.
Okay, and this is additional purchases of residential properties?
Correct, residential properties only.
And then does that now encompass furnished holiday lets?
It will, yes, and I think
so that's a change that maybe some people wouldn't have thought.
Yeah, I mean, I think, and just to sort of finish up on the overall 5%, the other body of persons that will be affected by the extra 5% will be companies as well. So if a company buys any residential property, then it will be paying the surcharge. It's not just there is no kind of second home ownership concept for companies. If you buy a residential property in a company, then that 5% will kick in on that. I think that the furnished holiday let change is not something that was part of this budget, but it does start and was confirmed that the government are going to introduce this. It was actually introduced in the April or the spring budget. And essentially, furnished holiday lets have had a kind of a little bit of a tax favoured treatment across a number of different areas. I think the ones that people focus on, you're right, are this sort of income or corporation tax treatment and the capital gains treatment for individuals as well. And essentially, all of that's being swept away from the 6th of April. So from an income tax or capital or corporation tax point of view, furnished holiday lets were treated almost as if they were trade. They're not quite a trade, but a sort of trade.
Halfway house.
Exactly.
Area there.
Exactly that. So they were kind of quarantined into their own little pocket from a tax point of view. But the big difference from a sort of an income taxes point of view was that you were able to claim capital allowances on any sort of fixtures and fittings and planted, sort of cookers and stuff like that you installed in the property. From 6th of April, that goes to align with what's the sort of more general property businesses. So a residential long-term let might be a good example for that. Again, talking just about resi property here rather than commercial. But essentially, there's a relief now for longer-term lets, which will apply to furnished holiday lets, which is what they call replacement asset relief. So it's a rather bizarre one, but if you buy something new and it's the first time it's gone into the property, say a new freezer, it's never had a freezer before. If you buy a freezer, then you can't claim for the initial cost of that first freezer.
But if you had a freezer,
and you replace it, you can.
Yeah.
So that's a real significant change for furnished, for any kind of furnished property, really. That you're not going to be able to claim that sort of tax deduction on that new. So the best example is if you're getting a property and sort of effectively it's or converting it from say commercial to resi or whatever, it's the first time you've installed a freezer or an oven or whatever, you won't be able to get a deduction for that.
So and again, this might be something that you don't know off the top of your head, but where do HMOs fit? So HMOs, houses of multiple occupancy, we've got a lot of sort of full-time and part-time property developer and property investor clients. And I know that a lot of them are going down the HMO route, taking a residential property and converting it into 5 apartments or house with multiple occupancy, where do they sit in these
I've got to be
rules?
honest, Sarah, and say that's not something that I
No.
really know the answer to. You know, if it was a hotel or something, then you know
Then
that's
it's clearly a
something. Yeah,
hotel.
clearly a
I
hotel.
suppose if they're buying it as a residential property and
Yeah.
converting it, they're going to have the stamp duty impact.
Correct. Yeah.
And then we just need to look and find out about.
Yeah, that's not something I really I've not looked at in a great deal of detail. Yeah, I know. Gosh, finally. But I think the other thing about furnished holiday lets, which is really important, particularly for individuals, is up to 6th of April, if you sold a furnished holiday letting business, so then HMRC would allow you to claim business asset disposal relief, you know, the tax relief everybody knows is entrepreneurs relief. You could get that on the sale of the property. So you'd potentially only pay 10% on the first £1 million of gains. Again, it's just going to be a normal residential property disposal after.
So would you also have got business property relief if you handed it down, passed it on?
That's always a little bit of an interesting one, because a business property relief from an inheritance tax perspective, it kind of focuses on the extent to which there's additional services provided over and above the furnished holiday let. So yeah, I think there's been, as ever with tax, there's been multiple tax cases which have turned on, you know, does the owner come in and greet people? Does she give them maps? Does she take them around? You know, he or she take them around, or do they basically just, here's the keys? Yeah, exactly. So it really, what additional services do the owners actually provide over?
Is it a proper business, or is it just a?
Yeah. And I don't necessarily think even that will particularly change, but you know, the reality is you've got a pretty tough ask to convince HMRC that you get business property relief on it now, and so it's not going to get any easier into the future.
That probably brings